Thanks for clicking. Canada's plunging real estate sales are due not so much to uncertainty surrounding the Trump tariffs, but rather to February having 28 days this year rather than 29. This according to a CTV interview with a real estate broker.
It has nothing to do with tariffs, in my opinion. We had a shorter month, for one thing. February had 28 days. Last year we had 29. That makes a big difference.
And yeah, as we'll see, no pushback from the interviewer. Nothing, not even a question as to how a 3.5% reduction in the number of days could lead to a 30% reduction in the number of sales.
What's 2 plus 2? Huh? You'll be fine.
But even that outlandish claim was not the worst of it. Rather, as we'll see, that was that the effects of the tariffs are going to be unknown, but we are going to be seeing lower interest rates.
We could have a soft economy and a strong real estate market. Those two things can happen.
How does the Bank of Canada...
But this realtor is by no means alone in trying to pump these assertions, with realtors telling the CBC that there is a silver lining to these tariffs, and broker hero Rob McClister of the Financial Post telling buyers at the beginning of February that these tariffs and the interest rates that follow could be booster juice for the real estate market. Yet, as we'll see today, real-time evidence from the bond market for the past 6 weeks or so reveals what we've been saying on this channel. That A, we're either getting lower rates amid devastating tariffs, or B, we're not getting those tariffs, but we're getting higher interest rates. So what I want to do today is go over the interview that was aired on Canada's most watched news network, doing CTV's job in questioning the assertion that February having one less day than last year. Oh, and snow. It was snow too. That led to the 30% drop of sales, go over some contrary indicators, and back those up with some evidence.
The f*** is that?
Speaking of Canada's media, the next policy rate announcement coming from the Bank of Canada is set for Wednesday, where the puppets of the real estate industry will be competing for this year's Excellence in Canadian Journalism Award, as we will continue to count to see which news outlet asks the governor the most times, when, if, and by how many times he'll be cutting rates, with CTV currently holding the lead. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into this interview. On to the interview. First off, let's get this nonsense out of the way real quick. As we saw earlier, Hill told CTV News that with February having one last day, that could be the reason for the 30% drop in sales. But if we go to the difference calculator, we'll see the difference between 28 and 29 is only 3.5%. Was that 3.5% drop in the number of shopping days available enough to account for a 1,500 drop in sales that we saw in Toronto? And if we look in the calendar, both February 24 and February 25 all had 4 Saturdays and 4 Sundays, the traditional big buying days. In fact, February 25 was only missing a Thursday compared to February of 24. Were those extra 1,500 sales supposed to happen on that extra Thursday?
That makes a big difference.
Most watched national news network. You usually only see this stuff on TikTok, but I guess CTV News is hoping to propagate it nationally.
I challenge you to a battle of wits.
But let's move on to the other explanation offered by the real estate broker. The snow in Canada.
We also have had a ton of snow, and it wasn't just us. It was Toronto. Toronto was snowed in. We were snowed in.
And sure, snow probably did stop some people from buying. As reported by the Toronto Star, there was an awful lot of snow, the most since January of 2022, and the highest 6-day span since February of 2019, back when Toronto had 500,000 less people, yet had about 1,000 more sales than it did this February. So it's not overly clear that these massively plunging sales were due to a 3.5% drop in the number of days available in the month, or B, that there was snow in Canada. Alternatively, it could be prices, or B, potentially uncertainty about a trade war with the global superpower, in that people that are worried that they might not have a job next week tend to not want to make the biggest purchase decision of their lives. With that said, the realtor did get one thing right, that the bond market is forward-looking.
Because fixed rates are going to drop because the bond market keeps dropping. So the bond market is very forward-thinking. So that's why I'm pretty confident that we're going to see this drop next week.
Which, as we'll see, is very much true. But then she kept going.
Because no one can tell us what the tariff is going to look like, because they don't know what the tariffs are going to look like. So all I can give you are actual real numbers. The bond market is insisting that we are going to get lower rates.
Well, no, not at all. As we'll see, what the bond market is telling us is that it doesn't know what's going on. It lacks the certainty offered up on CTV, Canada's most watched network. Let's take a look at what's been going on in the bond market for the past 6 weeks. For those not in the real estate industry, the pattern should be fairly discernible. For those who are in the real estate industry, we'll have a summary at the end.
I appreciate that.
Looking at the bond chart, we can see that within a period of about 3 weeks, starting on January 15th, the yields on the 5-year Government of Canada bond began to plunge, down about 65 basis points by February 5th. And what happened to make yields bottom? Well, on February 3rd, Trump agreed to pause the tariffs for 30 days. After which we can see yields on Canadian government bonds jumped back up. So from January to February, on the assumption that tariffs were coming, we see yields plunge. Then, when we got the delay for 30 days, yields pop back up. And we can see this pattern continuing right up until now. On February 24th, Trump reiterated that the tariffs for Canada were going to be on time, and yields fell another 23 basis points. And you can get really specific to see how this works. If we look between February 25th and 27th, yields flatlined, which was back when Trump said that tariffs would be coming, pending negotiations. We had a few days of uncertainty as to whether or not we would be getting those tariffs, and yields remained right where they were. Then, on February 27th, the president, after a few days of hemming and hawing, said that the tariffs were coming on March 4th. And then we see one final leg move down on those tariffs. And then, of course, we did get those tariffs last week, but then when those exemptions, with those USMCA exemptions, bond yields shot back up another 20 basis points. And this pattern is demonstrable within any given day, within any 24 hours, where the president speaks and yields go up, then he speaks again and it looks like we are getting those tariffs, and yields go back down. And of course the bond market is sending yields back up when it looks like those tariffs might not be coming, because in the background, inflationary worries continue to persist, with some even talking about the Federal Reserve having to raise rates. While tariff talk may have overtaken the media, it might be the talk, the new zeitgeist in and around Canadian and probably US media as well. That doesn't mean that inflation worries have stopped. If tariffs aren't going to materialize, if tariffs aren't going to bring down the economies, then the bond market is going to have its due and is going to be getting its pay for rising prices. And yet, despite all of this evidence, despite what we can see clear as day in the bond markets, in the volatility, in the up and down on tariffs and no tariffs, we continue to have a real estate industry enabled by the media, telling Canadians that interest rates are going to the floor, tariffs or not. Maybe we can come up with some sort of mnemonic device to help realtors remember the process.
Bid goes up, bid goes down, bid goes up.
Yeah, like tariffs go up, rates go down. But you have to remember that the tariffs need to go up. So that's where we've been with the bond market. That's where we've been with real estate sales and with the bond market since Trump took office. But now, where exactly are we going?
When we get lower rates, it's never a bad thing for real estate. We could have a soft economy and a strong real estate market. Those two things can happen.
Sure, we can. Here are the last 4 recessions that Canada's had over the past 40 years, and here are the real estate property prices. Let's go back to the recession between June 1981 and October 1982, and prices dropped. Then we'll go back to the recession between March of 90 and May of 92, and prices dropped. Then we'll go back to October of 08 to May of 09, and surprise, prices dropped. And then, of course, we had the recession of 2020, the once-in-a-century global pandemic, and as we all know, prices increased.
Throughout history until the end of time forever.
So, sure, yes, technically the evidence does say that we can have a recession and a booming real estate market, though that's a 1 in 4 chance. So, plunging real estate sales in February, of which we are all aware, with the CTV and its real estate broker telling us nothing to do with the Trump tariffs. In contrast to reports coming from Royal Bank, coming from the Canadian Real Estate Association, coming from Canadians themselves, and anyone else with very, very basic, even instinctual economic knowledge.
I'm letting you go. You're fired.
The expert presented by CTV did point to the bond market, which is a big step for a realtor, but there is a bit of nuance involved. The bond market isn't telling us interest rates are heading to the floor tomorrow and going to stay there regardless. The bond market is telling us, as we can see with those yields moving upwards every time it looks like we might not get tariffs, The bond market is telling us that it's still worried about inflation, just right now, tariffs are the immediate concern. But look, we've said on this channel that this is what they're going to do, this is what the real estate industry is going to do. They are going to point to these lower rates and say prices to the moon. They really only have one play, but the evidence just isn't supporting the industry's narrative. It's not even really the industry, even the CREA knows this is nonsense.
Friends, that is saying something.
With that said, we will obviously continue to track how this all plays out on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, thanks so much for watching.